Hello guys, Bruce here. I'm back. We are still unlocking wealth through index trading. Now we are going down to the actual trading process. We are wrapping it up. We are applying everything that we know. But I've been saying one thing, and this is the most important thing ever. How the market feels, market sentiment, it is more important than anything that you can draw on this chart. You can come here and draw a line, you can come and draw 10 lines, you can draw a zone, you can do whatever. Market sentiment will always prevail. It will always win. So you don't want to be against the market sentiment. You don't want to be against the current trend. You really don't want to be against a current trend. You cannot push a car. You cannot push a car. If the car wants to go forward, don't push it backwards, because you won't win. You will not win. Doesn't matter how much your account is, you will not survive. So always aim to be in line with the market. I love to look at the market environment to understand why price is falling or dropping. One of the things that I do, I'll show you one, right? I'm showing you one of the biggest things and very important. I just opened the USD/JPY chart. This is one of the things I use to tell me where we are going next. This USD/JPY. Okay, let me show you what I'm talking about. Look at this week. This week. Can you see this week? Price literally opened there, it went down, right? Close at the bottom, right? I'll open this. Okay, that's H4, right? I'll open DEX, and then I'll go to H4 and look at that same week. Price opened there and it did the same thing, right? Perfect. I'll open Nasdaq, right? I'll look at the same week. Price went down, but in this case Nasdaq had recovered a bit by the time it closed, but it's the same movement as you can see. So USD/JPY always gives me an indication of where we are going next. You can look at Dow Jones. Okay, Dow Jones H4. See, same thing. It's the same thing. Let's look at UK. I don't think this one follows it, but let's check. Well, it's the same thing. It went down. Can you see that? Okay, so I'm only bringing this up just to try and show you something that I find very useful. USD/JPY tends to give me the direction of where we are going. Look at something. We're gonna jump this week, and then we look at weeks before that. We've been having an uptrend, right? We've been having some sort of uptrend. Let's come here, and then we're gonna jump this week, and then as you can see, we had an uptrend. Okay, let me just check. 1 2 3 4 5 6. 1 2 3 4 5 6. Can you see? 1, right? 2 3 4 5 6. Uptrend and then downtrend for 3. Can you see? 1 2 3 4 5 6. Can you see that? It's been an uptrend on this week, and then here on USD/JPY we had an uptrend, but this one we didn't have an uptrend. Consolidated. As you can see, we had 1 2 on this one. There we didn't have an uptrend, and then when it started falling, it fell. But most of the time it works perfectly together. I use it to help me determine where we are going. Nasdaq wasn't really smoothly going up, but still in the actual trading on those days, you simply look at if on the day or on the week, if these things are going together. Like I'm saying to you, I look at, okay, USD it's going up. Then I look at indices, and then I see, okay, maybe it's also going up. Because of that, I will know, okay, today we have a correlation, or this week we have a correlation. Then I will know that I will simply wait for USD to turn maybe at the previous high or whatever, and then I know that I'm expecting the same thing to happen when it comes to this side. You get me? The correlation is not always there, but it always happens most of the time. So it's just a matter of, remember I said you check your environment, you check your market sentiment, you check your environment. So what I'm saying, I'm checking the environment. In the environment, I can see that, okay, USD and these indices, they are moving together this week or today. Then I've checked my environment. I know that USD will give me a clear indication of where we are going. Do you get me? In a sense, let me just give you a practical example of what I'm saying. Maybe I've been talking too much and you don't get what I'm saying. Maybe I'm not making sense. So what I'm saying to you is, let's say we are at support, right? We are at a support and I'm not sure if price is gonna break down. And here, let's say we are also at a support and I'm not sure if price is gonna break down. So what I'm saying to you is, if I see USD shooting all the way down, I know that sooner or later this is gonna fall. Do you get what I'm saying? So those are the kind of things I'm talking about. This can be too big, but then this turns out to be small. Or this can be small, and then this turns out to be big. But one way or the other, you get to find that USD had given you a hint of what's about to happen this side. Do you get me? So it happens a lot. So these are one of the things I look at in my trading, to look at my market environment, what's happening around. Do you get me? One of the things that I use also to look at what's happening around, to understand the moves behind whatever is happening, I like Forex Live. I have them on Telegram and on Twitter. They always post Trump once again downplayed the possibility of US retribution, stuff like that, retribution for the matter of a journalist, whatever, stuff like that. Just, these guys are always up to date. They are always up to date. They will tell you everything around what's happening. You see, Forex News Rep. Can you see that? You just come and you read a lot of things. They have a whole lot of things to read, which will help you understand why the market is moving. Do you get me? So what I use this for is, it will give me the reasons, because these guys are always watching everything, so they will understand that, okay, maybe the current gold rally is because of what Trump did. So they would have followed all the news, and then when they come here, they just throw up a summary. They are always on time. They are never very late. They are always on time. And what I love about them is when they come here, everything has been summarized. So I like to always get their notifications. Their notifications are always on my phone. Whenever I see a headline which I think is going to affect what I love, I open it, I read, and then I will have a clear indication of what's happening around what I want to trade. Another thing that I use is Owanda. I'm with them. So they have this platform. In this platform, you can just click on news, and then after you click on news, their news will pop up, and then the same thing, I just come and check what I'm interested in. You can look at something like energy roundup using market talk. So this will have like paragraphs. Each paragraph is discussing something new. You can find, like, for instance, this paragraph is discussing the Mexican peso, right? This one is discussing the oil production. This one is discussing the stocks indices in Hong Kong. Can you see that? So it's these things that I follow a lot. I read, and they will give me a clear indication of what's happening. I will still try and break it down, but for now I'm still showing you what I use. You look at this, you can read up. I read up all these things. I read up all these things. I read up all these things. And then the next time I open trades, I will understand. You look something like this. Trump and Xi agreed to a tentative meeting on a G20 summit next month. But if USD and the Chinese doesn't clear 6.95 next week, as fundamental pressure from US-China trade tension dictates it should, this will be a significant surprise. You see, I read all these things here. I check these things, I read them, then it helps me understand what's happening here. These short-term spikes that happen that can kick you out, or the trend. Because these guys are also going with the trend. They will tell you that price continues to go down because of the trade war or whatever. You get me? So it's always good to follow news, to follow these guys, because you will get to understand what's happening around the market. You get me? They are very useful, very useful. I use them a lot every day. Guys, this thing, let me just include this now. This thing is not a game. It's not a get rich quick scheme. You put in so much effort at your workplace for your boss to pay you. Do the same in forex, in indices. It will pay you as well. But if you're just gonna come and ignore everything else and just want to draw 3 lines and then expect a lot of money, try it. Maybe it will work for you. But one thing I know that works and hardly disappoints is when you put in the time and effort to look at your environment, to understand the moves that are happening. Do you get me? You need to put in the effort. Look, these things it will take you less than 10 minutes to read this thing. And then after 30 minutes, they have a new one. Less than 10 minutes, even 2 minutes, you can be done reading this thing. But look at something. You need to put in the effort, and you'll face less disappointments. Imagine these guys will tell you that in the next 30 minutes, Trump is about to take the podium and he's going to announce something very big. And you are just coming here, you're not sure, you didn't check, you just come and draw your lines. Trump is about to announce something. You are just coming here to draw your line. Price will turn here, it will turn here. And then Trump comes, he bombs. And then price just, he does well. And then price just breaks all the way up. Why? You were too lazy to give yourself 2 minutes to just go through before taking trades, to check if what you have still stands. Do you get me? Put in the work and you will face less disappointments. Put in the work. You always put in the work at your workplace for your boss. Treat this thing like a serious thing, man, and it will pay you out. It will really pay you out. Another thing, guys, always have a trading plan. Always have a trading plan. Why should you have a trading plan? It's simple. In your trading plan, you had perhaps said, okay, when price gets to this RP zone, RP number, I'm gonna buy. And then you also have an RB number here, right? and then you'll be like, I thought price was gonna get here, but it seems like it tended this RP zone. Let me just jump in. Remember, you are now going against your plan. Your plan was to buy here, but now you're seeing something else. You're not working with a plan. You're just gonna trade randomly. You buy here, price goes up, you're seemingly happy. You go and have coffee or whatever. When you come back, you are deep in a loss. Do you see why you need to have a trading plan? Have a trading plan and only trade the plan. Anything else that happens in between, don't trade it, unless if you have an account to play. But you need to have a trading plan and an account for the plan, because with a plan you will be able to see where you are lacking. You will be able to have consistent profits. Do you get me? Always have a trading plan. You will always see consistent profit. I always thought people were crazy when they spoke about a trading journal. But that thing, trust me, is the most important thing ever in your trading psychology. That doesn't mean, look, if you're not planning your trades, then you're just gonna be buying and selling at every RP number and RP zone. Because why? You don't have a plan. And you will make wins and losses because you don't have a plan. You just trade as you want or as you get the time. That does not work. But with a plan, you have a detailed direction of what you're doing and where you are going, and you will only trade that, and you will minimize your losses and increase your wins. Always have a trading plan, guys. Okay, I hope you will take it and apply it. If you don't apply it and things are not working out, just do this simple thing. Get a plan, a journal, start using a trading plan, and compare your results, and then see for yourself what works, and then take it from there. Right? Okay, perfect. So now we are going to the trading process. Stop loss is the first thing, the most important thing in trading. Stop loss. Stop loss is the most important thing in trading. From one RB number to the next, that's $100. From this, right? Oh, guys, don't be shocked how I spotted this. No, I just know that these things turn at RB numbers. All I had to do was to go and put there, and then I know it would be an RB number. That's all I had to do, really. Nothing much. I'm not trying to be spooky. No. So all I'm saying to you is, from 400 to 300, it will pay you $100. Right? Perfect. So the RB zone is from positive 10 to minus 40, meaning that the RB zone as a whole has minus 50, and then the stop loss must be outside the RB zone, right? Stop loss must be outside the zone, right? Always put your stop loss outside the zone. You buy anywhere in the RB zone, and then this is what you must do, guys. It's very important. As you know, these things are very volatile. Once price goes into profit, right? Let me say you bought somewhere here. I'll just do this. I'm teaching you a skill that will help you a lot, right? Then let's say now price is here. Right? Price, what color is the price? Let me say it's gray. And then it's solid. It has to be solid. So I'm saying you bought here. And then when you see that price has moved these things are too volatile. What you must do, you must take your stop loss and put it on break even. You know you are safe. This trade will never become a loss. And then as price moves higher, move your stop loss. As price moves, you move your stop loss. As price moves, you move your stop loss. And then when you see that the price is closer to the take profit, you tighten your stop loss. You put your stop loss too tight. If price continues going higher, you continue. Then it comes and hits you, and then you out of the game. Can you see that? Perfect. So that's how you trail. It's called manual trailing stop. Right? Perfect. So now the actual trading process, applying this thing, I use H1, the hourly time frame, to do my execution. I'm gonna show you something very powerful, and I'm gonna explain it to you. I hope you will understand me very well. Right? Let's say we were gonna sell here at this RB zone, right? We wanna sell at this RB zone. I'm gonna explain it. Remember, an RB zone goes all the way until 40, right? 40, right? So let's say you are saying this thing is gonna turn, right? That's what you're saying. You're saying this thing is gonna turn. So I'm saying don't come here. As you can see, prices are going up, ne? Don't come here and say sell, execution. No, don't do that. Price is still going up, right? You can see price is still going up. Don't come and say sell, because price will still go up, hit your stop loss, and then come down in your direction. So what is the best way to avoid that? Because first of all, you know we are at an RP zone and price is supposed to turn, but price is going up. What is the best thing to do? Avoid sniper entries. Try to show off that you have RB numbers which people don't know have, because with RB numbers, guys, you can get spot on entries, like right on the, let me show you. With RB numbers, you can get, look at that, you enter right there, and then you go and show people, look, I know where the price turns. You get me? So to avoid those things, just try and trade in peace and leave everyone else, because now you'll always try and chase this, and these are not always there, and you will just hurt yourself. So avoid these social media things that are going on and just make money. What's wrong with making money in silence? Nothing wrong at all. Nothing wrong at all. So now, let's say price is there, right? And then what I'm saying to you is, don't just go and click on execute. No. I want you to use orders to do this thing. I want you to come here, right? And put a sell stop. When you want to sell, you need to put a sell stop below the price. Do you get me? If you want to buy, you put a buy stop above the price. If you want to sell, you put a sell stop below the price. Do you get me? Not sell limit or buy limit. A sell stop. If you want to sell, the price is simply going up, but you're saying it will go down, you put a sell stop. What you're saying is price must come and stop here and then sell. That's what you're saying. That's what it basically means. Or you're saying price must come here, stop, and then buy. Do you hear? So now what I want you guys to do is use a sell stop. Why? To avoid a situation where price you're gonna execute and then you don't even see any profit, not even for a second. Price just continues going all the way up until it hits your stop loss. But if, because we know one thing for sure, at an RB zone, price should turn. And if we know that price turns at an RB zone, it's simple. We just come and put a sell stop, and then we put a stop loss. We come and put a stop loss here. And then when price comes here, it will trigger the sell, and then boom, went all the way down. Can you see that? So this is way safer than, okay, let me show you, way safer than, okay, here, let's say we are here, right? Let's say we are here, right here, and then you were thinking price is now here, and then you're like, RB zone, I'm buying, it should turn. So I'm saying don't just come and buy, because look at what happened. Price didn't even go up, it just continued going all the way down. Can you see that? So to avoid this case, all you have to do is you come here, you put a buy stop. If price is indeed gonna turn, then to find your buy stop, and then it will go up with you. You put a buy stop, you put your stop loss below, and then if price is indeed gonna go up, it will trigger your buy stop and then go up with you. But look at how you would have been safe from losing here by simply using what? A buy stop instead of an execution, because you execute, price just continues going all the way down, and then you lost. Can you see that? Another practical example, I'll do another example of this. Let's say you have your RP zone here, RP number here, right? You're saying I want to sell, right? Price was here at 33, right? You are still saying it's an RP zone. It's an RP zone, I'm gonna buy. I'm gonna sell. Look at this. Price didn't even for a second get back here. It just continued going all the way up. So what I'm saying to you is to be safe. It's simple. You came, you found the price has already gone above. All you do is you come and put a sell stop here, and then you put your stop loss there. What is going to happen here? Price would have left you, went all the way. But are you going to lose anything? No, you're not going to lose anything. But had the price decided to turn and go all the way down, what was going to happen? It was going to trigger, and then boom, gives you money. Can you see that? But had you just came here and placed an execution, put your stop loss there, boom, price hits your stop loss, goes all the way. Can you see that? You were not even going to see a profit for a second. Price just went all the way, hit your stop loss, and that's it. Can you see that? It's going to be that simple. Here is a PCP. Let me show you the same thing with a PCP. Remember, this is a PCP. You've identified a PCP, right? Here is a PCP. We are saying price is going to continue from here. And then the price is here. Let me remove that, because PCPs don't need RP zones. So the price is here, right? You can see that price is going up and down, up and down. You put your stop loss outside the PCP, right? You put your sell stop there. And then if price is gonna break this PCP to the upside, so be it. It will just continue going all the way up. And why would that happen? It's mostly because we are actually at an RB number, RP zone, as you can see. Can you see that? So you are saying, as you can see, it's actually a downtrend. You can see it. Maybe you would have seen it from USD JPY, right? Maybe you would have seen it from this. Okay, we're actually going down. Okay, let me just go to the. Are we on a daily? Yes, we are on a daily. So let me just show you that day on a daily. On a daily, I'm not sure. Yes, the day. Can you see this is a PCP? And then what I'm saying to you is, if you look, you can see, oh, USD JPY is actually broken down, right? And then you come here, you're not sure. Well, let's look at this. It was similarly going all the way up, breaking to the top side, right? And then you come here, you can see it's trying to break to the top side. And then you are excited, you are saying, it's an RP number, whatever. RP number, there it is, it's an RP number. You're like, it's leaving me, let me buy. No, I'm saying don't do that. What you need to do is, if you want to buy this thing at an RP number, it's simple. You come here, price is still here, right? You put a buy, stop here, price comes, triggers, right? And then goes all the way up. You move your stop loss, and then remember, from here to there, you're already on $40 profit. So obviously you're gonna protect your $40 profit. Put your stop loss on break even to protect your what? $40. And then price comes down, it hits you, right? You're still safe. So now let's come to a process of buying from a PCP. Price is up there. I'm saying to you, don't come here and say sell. It's a PCP. It will going down, right? But rather come and put a sell stop here in the PCP. Don't come and put it here. It will hit it, and you can hit it and still go all the way up. No, come and put it here in between the PCP. And then what's going to happen is, this price, if it's indeed a PCP, it will come and hit your PCP, stop, and then go all the way down. Put your stop loss and break even as it moves down. You keep bringing your stop loss, it keeps moving. Can you see that? Okay, let me do another example. Maybe you didn't get that. Another example of how to trade a PCP. Okay, here's a PCP. You can see a PCP here, right? So what I'm saying to you is, do not come and sell here, right? Do not come and sell there. What you must do, rather, put a stop loss there, put a sell stop. Remember, you want to sell, so you put a sell stop right there. You put a sell stop, and then if price is indeed using this as this PCP, it will come and hit your sell stop and go all the way down with you. Can you see that? Okay, let me get one for buying, because everything I'm showing you here is just for selling. Maybe I'm confusing some of you. So here, right, PCP, right? So what I'm saying to you is, with a PCP, stop loss is always outside. You put a buy stop here. Where is the price when you're doing that? The price is here, right here. This is where the price is at that time when you're looking at the market. Can you see that? This is the current price. I'm saying don't just come in and buy, because price can continue going all the way down, hit your stop loss. But rather put a buy stop. If price is indeed going up, it will go and hit your stop, your buy stop, and then continues going all the way up. Same thing here. Right here. You put your sell stop because we want to sell. Stop loss outside, then price is here. It's simply going up, right? It's fine. All you do is you put your sell stop. If price is indeed going down, to come a hitch, then to give you what you want. Can you see that? So yeah, that's about it. That's about it, guys. You wait for the price to get to the RB number. You do the same thing. RB, so you do the same thing. PCP, the same thing. So this is it from me. Happy trading. Collect those pips. Nasdaq. This Nasdaq, you know what it does? Every time at 3:30 South African time, when they open their markets, it always chooses one direction and then goes in that direction. That's what it does. I've seen it a lot. I don't really trade it, but you could also trade it using this sell stop and buy stop. But I don't do it. I'm not that type of trader. But you can also do it and make money. It's simple. 3:30, it will shoot in one direction. You just put a sell stop or a buy stop. It will choose a direction. You put your stop loss in break even, and then if it's coming back, you don't lose. If it's continuing, you make money. That's simple. What am I saying? Let me just show you a practical example. I'm saying, this is what I was showing you, that price at 3:30 will just come and then choose to either shoot up or shoot down. All you do is you'll have your sell stop and then it will just continue going down. That's what it does. And then you just put your stop loss on break even, or you go out and not be greedy. But yeah, that's just it. Even what's this DEX, it also does it at between 8 a.m. and 9 a.m. South African time. But yeah, it's up to you. I'm not really gonna talk about that. Happy trading, guys. Remember PCP, because people have a sense of, what do I do? How do I know if it's gonna break or not? You look at the trend. You look at the market sentiment. What's happening? Remember, price in overall is going somewhere. When you look at it, where is price going? Are we going all the way down or are we going all the way up? That's what's important. If we are going up, then you know that at that RP number, the consolidation will be a PCP. You get me? That's if the trend on that day is strong, the market sentiment is strong, then that RB number will be treated as a PCP indeed. If the market sentiment at that time is strong. Market sentiment, I showed you. You can look at USD JPY. You can look at the USD as a whole, if it's strong or not, or JPY if it's strong or not. Because when JPY is strong, the indices, the equities become weak. You can look at what is being said around. You get me? So these are the kind of things you look for. These things, they will help you increase your winning rate by 10%. You don't use them, it will actually reduce your winning rate by 10%. Meaning that if your winning rate was 80, not using this, it will reduce it by 10. Using this, it will increase it by 10, meaning that you will go to 90. If you don't use this, you will go to 70. That's the winning rate. So yeah, that's about it. What did I say? Market sentiment, guys. Market sentiment is how everyone is feeling about this thing, how the market is feeling. What are people saying about this thing? That's what market sentiment is. The trend, where is the trend going? Because PCP is basically, they are just there to help you enter a trend. That's all. Nothing much. PCPs are just there to help you enter a trending market. It's not any other thing. It's just to help you enter a trending market. And then RB numbers and RB zones are there to help you enter a changing market where the direction is changing. Right? And then another important thing, guys. Look at something. I want to show you something here. over the time. Can you see what's happening? Price is just going up over the time. Can you see that? Look at something. As much as price is going up, it will go down, create a new high, go down, create a new high, go down, create a new high, go down, a new high, go down, a new high, go down, a new high, go down. Can you see? This is what price does. Can you see that? Goes up, then down, up, and then down. And then on top of that, I want you to notice something, right? Look at the bullish candlesticks. They are small, right? Going up, it's low, but the day it falls, the candlestick is bigger. Going up, it's low. The day it falls, the candlestick is bigger. Look at that. Going up, it's patience, but the day it falls, the candlestick is bigger. Going up, it's slow. The drawdown is bigger. Can you see that? These candlesticks of going up, they are quite slow, but the day it falls, they are bigger. Can you see that? Going up, it takes time, but when it falls, it's bigger. Can you see that? You can go to this as well. We are going on an uptrend, a downtrend. The candles are bigger, but going up, slow. When it falls hard. Going up, slow. But when it falls, big. Can you see that? When it falls, big. When it falls, it's big. When it falls, they are big. When they fall, they are big. Can you see that? Going up, we are slowly going up. When they fall, big. Slowly going up. When they fall, big. Can you see that? The fall is always big. We are going up slowly. When it falls, the candlestick becomes big. Going up slowly. When it falls, candlestick become big. Going up slowly, fall, big candlesticks. Going up slowly. When they fall, big candlestick. Slow, fall, big candlesticks. Can you see that? So you can see how these things work, right? Okay, let's go. I can open every index. It's the same thing. Same thing. You are going up slowly. When you fall, say you fall in a week or a day, you fall in a week or day. Going up slowly. When you experience a fall, it's big. Can you see that? Going up slowly. Look at that. But the fall is big. Can you see that? We are going up, fall, up, fall, and the falls are always big, right? So now, that being said, why is it like this? I need you to understand. If you were to build a business today, remember this is just stocks, it's businesses. If you were to go and build a business today, how long will it take for your price, for your net worth to increase? It can take years, right, to build an empire. It can take years. The falling, for it to fall, how long is it gonna take? It can take a week, can take a month, can take a year, even though you built it for 40 years. So that's just how it is. It's real life problems, this. The rising up, it's slow, it's easy to build, to fall, and difficult to build. If it was easy to build, then everyone would be a millionaire. All businesses would be big. But all the cases that we see, you get your Steinhoff,